And we are back. Here we go, guys. Again, we are still on where we left off. Question E, the customers returned, and we had one journal entry, I remember. We had a credit to cash. Ooh, that's so skinny. A credit to cash. Let me make the pen thicker. A credit to cash for $6,000. We're going to debit merchandise inventory. I'll take that. We'll debit merchandise inventory, but not for $6,000. Okay? I'll take that, but not the number. So, good though. Good that we are, we're going to put it back on the shelf. So we're increasing our merchandise inventory since our inventory was perfect, and we're throwing it back on the shelf. So we're going to debit merchandise inventory. I'm going to put a key. We're going to debit merchandise inventory again for the cost, okay? And the credit to cash was for the sales price. So that is the key. And like I said, it is kind of like the reverse of when we sell a product. So when customers make a return of merchandise, are we going to debit revenue? Are we going to debit sales? If customers make a return of merchandise, what account do we work with when customers make a return? There's a special one. There's a special one we're going to deal with. Sales returns and allowances. That's the name of the account. You get the idea, though. So we have sales, returns, and allowances. Okay? So, real quick, I got a question for you guys. What type of account is sales, returns, and allowances? What type of account is that? Because it's a special one. It could be asked. I always point out those special accounts. What kind of account is sales, returns, and allowances? It's a contra account. Good. Good, you're close, you're halfway there. What type of contra account? It contras what type of account? Contra blank. What is it the opposite of? Not contra expense. It's not the opposite of an expense, it's contra revenue. Okay. Contra revenue. It's the opposite of revenue. A sales return is the opposite of a sale. Make a sale, opposite of sales return. Okay. So we have a contra revenue account. And if we have contra revenue, are we going to debit or credit contra revenue? What are we going to do to it? Going to debit it. Good, Savannah. And thank you, Sarah, for filling in the rest. So we're going to have a debit to sales returns and allowances for $6,000. This is like the opposite of sale. This is for the sales price. Now remember, the second part is going to be for the cost. That's why I have cost there. So let's finish up the second half of the journal entries. So we have a debit to merchandise inventory for the cost. Now what was the cost of each catnip that we sold to our customers? What was the cost of each catnip? Not $1,500. It wasn't $1,500. What was the cost? That was the selling price. That's how much we sold it to them for. What was the cost of each? Kitty's getting sad. He wants to know the cost. $866. Good. So $866. How many are being returned? 4. So how much is inventory increasing by? So 866 catnips, 3464. Gorgeous. Perfect. There we go. So we're going to debit merchandise inventory 3464, and like I said, we're kind of reversing the journal entry when we made a sale. So what is the last piece? What is that last journal entry to reverse what we did earlier? What was that last piece? COGS. We have COGS, cost of goods sold. So what are we going to do to cost of goods sold? Are we going to debit or credit cost of goods sold to finish off the journal entry, to reverse when we made the sale? I'll stick COGS at the bottom. Are we going to debit or credit cost of goods sold to reverse the sale? We're going to credit. Good. We're going to have a credit to cost of goods sold for the cost of goods sold, which is 3464. All right. See that one, if you compare your two journal entries, the journal entries when we made the sale and recorded the sale, which was debit to cash for $15,000, credit sales revenue or revenue for $15,000, and then we had the debit to COGS and the credit to merchandise inventory. This is sort of the flip to it. the flip side. So we're returning the catnips to the inventory for the price at cost. Any questions? Remember, I want to stress again, the first set, whether you're selling or making a return and putting it back on the shelf, you're going to return the cash or the accounts or lower accounts receivable and have sales returns and allowances for the sales price. And if you're returning it to the shelf, you're going to have the debit to merchandise inventory and the credit to COGS for the cost. Cost different than sales price. Cost is not how much you sold it to your customers for. Okay? So any questions on that one? And if you are good, and please don't hesitate to ask questions, but if you are good, give me the approval sign. Savannah's approving. How about you, Sarah? You okay there? Sarah's okay. And I hope you guys enjoyed my cat drawings. I am not a cat person, actually. I'm actually a dog person. I know a lot of cat people, though, so I feel like I'm one of them. Right, Michelle? Cat people. All right. So I'm getting applaud. Sarah, are you a cat person? So let's move to the next one. No? Okay. Not cat person. All right. So let's move on to the next one. I want you guys to do F because we've done something like F before. So Grumpy Cat Company sold 12 catnips for $1,500 to customers on credit. They were given the terms 210 and 30. All right, I'm going to give you guys some time because, and this is the only one I'm going to have you guys do by yourself because this one is exactly like the one we've done before, except last time we sold 10 for cash. This time we're selling 12 for credit. So I'm going to let you guys do that. The full journal entries, there's going to be 4, and when you guys have it, post the journal entry into the chat box. So I'm going to let you guys handle that one when we sell 12 catnips to customers. That's so cute. And that's what I drew my little cat for accounting. There we go. I've been practicing on eTutor. Everyone here is taking a look at the Grumpy Cat we're doing. All right, no more Grumpy Cat. Put the head in the game. All right, so give me the debits, give me the credits, give me more debits, and give me more credits when you guys have it. And if you guys want, you guys can put it on the board. I'll give you guys permission to use the board too, if you guys want to. All right, someone's attempting. I don't know who, but someone's attempting. We have life. Not so easy to write on the board, huh? All right, Savannah, keep going, keep going. You're doing good. Can you help, Savannah? Don't want to write it? All right, you have half of it. So far, you're good. Comes with a trained hand. All right, so you're good so far. That's half of it. That's half. So debit accounts receivable, you're perfect. 18,000. Credit, merchandise inventory, 18,000. There's the second half now. Because we're doing the perpetual inventory system, what is the second half? And use the first time we sold something as a guide. Definitely use that as the guide. So what is the second half? Remember, perpetual inventory method. Keeping track of inventory, that's the hint. Still on part, wait, no, we're doing part F, sorry. We're doing part F. What you got? You have the debit to accounts receivable, 18,000, credit to merchandise inventory, 18,000, but there's a second half to it because we're selling a product under the perpetual inventory system. So you have half of it, half. That's the first half. Remember, that's to recognize the sale. We recognize the sale. What is the second half under the perpetual inventory system? And go back to our past journal entries and just follow what we did there. And if you guys are still stuck, don't be afraid to say you are. Give me the confusion symbol if you guys are stuck. All right, Sarah's no hesitation. Full honesty. Okay, Savannah finally gave no shame in my game. I love it. All right, no shame in my game. So we are doing the perpetual inventory system. And I think it was Sarah who said we keep track of inventory all the time, do it all the time. So in this instance, is inventory being affected when we sell some things? Is it being affected, yes or no? Is inventory being affected when we sell? Yes. And how is it being affected? Do we have an increase or a decrease in inventory? And is this starting to sound familiar now with what we're doing? We have a decrease. And if we're going to decrease inventory, we're going to debit or credit inventory. We're going to credit inventory. So one of them is a credit to inventory. Is this starting to sound familiar with what we did already before? Like I said, we did this same scenario except with cash. All right? So how much are we going to credit inventory? Remember the hints I've been stressing with you guys earlier. The first one's for the sale, and the second one is for the cost. So how much are we going to credit inventory by? Think about this one, not the numbers. How much are we going to credit inventory by? You got this, guys. You got this. How many did we sell? Session 4 now. How many did we sell? I'm going to do it verbally. 12. What is the cost of each one? The cost of each one. Not that 1,500. Remember, cost. The 866 is the cost. 866 is the cost. Remember, 1,500 for this problem. Anytime we see 1,500, that's the selling price. That's the sales price. The 866 is the cost. Okay, cool. So we sold 12. They each cost 866. So how much is inventory going down by? How much? Good. 10,392, which is the 12 times 866. 10,392. Now what is the last journal entry? You guys should have this. The special account I keep talking about. What is it? What is it? What do we debit? What do we credit? Cost of goods sold. Feed it to me. Cost of goods sold. 10,392. And are we going to debit or credit that account? Yes, just like last time. Good. Good, Sarah. Good, Savannah. Just like the last time. See? This was just like the first problem we did when we sold something. Except instead of AR, remember, it was cash before. There was only one difference. So remember, first two journal entries, sale. Second two journal entries, cost. Okay? Can't stress it enough. Can't stress it enough. All right? Now I'm trusting you guys. You guys got it this time. Give me the thumbs up, because we did this already. You guys gave me a thumbs up and then confused. Any questions? And I stress, ask me questions. All right. Savannah, how about you, Sarah? You okay? Thumbs up? All right. All right, I'm playing it by ear. No shame in my game. All right, let's do this. So, let's take a look at January 20th. The customers paid Grumpy Cat the full amount due. All right? So I'm going to put the description of what's happening at the top. Customers who owe us paid us. Customers who owe us paid us, period. That's all that's saying. Okay, so how much do customers owe us? How much do customers owe us? $18,000, good. Are they going to give us $18,000? They will give us in cash, but not $18,000, maybe not. Check out what's happening in the question before. What happened in the question before? Isn't there something special going on? Possibly, maybe, perhaps. You gave me, how'd you get that? How did you get that? So Sarah can jump into discount. All right, so they're going to pay us $17,640. How much was the discount? How big is the discount? 2%. And how much in dollars is that 2%? $360. All right, so let's do this. So we're receiving cash from our customer. That was mentioned earlier by Savannah. Savannah said in cash, so we're going to get cash. And when we get cash, are we going to debit or credit cash? Going to debit cash. And how much cash are we getting? Are we getting 18,000? Are we getting 360? Or are we getting 17,640? Good. 17,640. All right. They don't owe us anymore. So what account do we deal with when people don't owe us anymore? What is going to be that account? Not account payable, when people don't owe us anymore. Accounts receivable. Good. Good catch. Good catch. Good catch. Sarah jumps on it. Accounts receivable. Sarah, all right. So accounts receivable. And if they don't owe us anymore, if people don't owe us anymore, are we going to debit or credit accounts receivable when people don't owe us anymore? What happens to accounts receivable when people don't owe us? Are we going to increase or decrease accounts receivable? Decrease with the credit. Good. Now, how much are we going to credit accounts receivable to show that these people don't owe us anymore? 18,000, the full amount. Good. To show that they pay off the full amount, even though they get a discount, we're going to credit accounts receivable the full amount, 18,000. Now, what about that 360 to get this thing to balance? What's going to happen there? That 360. Our customers are getting a discount, so what's happening to finish this off, this last piece? Sales discount. So we have sales discount. What type of account is sales discount? What type of account? This is another one of those good ones with the question mark. What type of account is this? It's one of those special ones again. What could it be? What could it be? Sarah, Savannah. I see you guys typing and stopping and typing and stopping. You guys keep me hanging on. What is it? What type of account is sales discount? Contra revenue. Sarah comes through in the clutch. Contra revenue. No shame in my game. That's your new nickname. All right, and the sales discount is for the discount, 360. We have a discount of 360. That's what the sales discount is for. Now take a look. All we need to do is get this thing to balance. So are we going to debit or credit sales discount to get this to balance? Good. We're going to debit sales discount to get this to balance. So we're going to have a debit to cash for 17,640. A debit to sales discount. Remember, sales discount is a contra revenue account for 360. And we're going to credit accounts receivable for the full amount of $18,000. Because we need to show on our accounting records that they don't owe us any money. And if we credit accounts receivable for only $17,640, it'll show people who look at our accounting records that someone owes us $360, which is not the case. All right. Woo. Gene. Am I pronouncing your name right? Welcome in. Stumbling in. Can you hear me, Gene? Welcome to YouTube. How are you doing? Can you hear me? All right, approving. We are working on a worksheet that has a picture of Grumpy Cat. Do you happen to have that worksheet? I emailed it probably earlier this week. Do you have that worksheet with Grumpy Cat on it? Yes. Okay. You can type in the chat box. Do you have that ability? You can talk to me through the chat box. Okay. So we are on the Grumpy Cat worksheet, just to let you know. We are near the end. We are on part H right now. So we just finished part G. You girls got it. Sarah and Savannah got it and gave it to us. Debit cash, 17,640. For, what was that one again? G. Debit sales discount, 360 in G. And credit accounts receivable, 18,000. All right, so let's move on to, we're near the end. Let's move on to H. H says Mr. Sauce, a.k.a. Mr. Sauce, a.k.a. Grumpy Cat. He's like, I came in the middle. Darn it. All right. So Mr. Sauce, a.k.a. Grumpy Cat, came into the storeroom and discovered that 2 of the catnips were missing. He probably ate it. Record this discovery. All right. So we checked our inventory, and we're missing 2 of our products in our inventory. What happened? What do we call this when we're missing something in our inventory? What do we call this? Missing inventory. I'm going to put a question mark. What do we call this? Starts with an S. It's an S word. Oh, welcome back, Gene. Having connection problems? What is missing inventory called? That's close. Special word, special accounting word. Starts with an S. Let's play some hangman. S. Let's play some hangman for this. This is a special key term. Missing inventory is called what? A? Oh, we're actually playing. Let me do it. A goes here. Okay, so we have an A. I actually like playing this with you guys. What is this missing vocab word? This is chapter 4. This is chapter 4. They actually talk about it sometimes in chapter 6, but this is from chapter 4. We have an E. Sarah's playing. We have an E. This is from chapter 4. What do we call missing inventory? Wow, this is the first. I'm playing hangman and e-tutoring. Here we go. So we have an E. No O's. You have the head. We have the head in the hangman. No O's. We have an S. It is an S word. We have an I. We do have an I. Any more? Oh man, we can't fully kill the hangman without knowing this word. No F. Ooh, ladies, think about it. So we have an S, an H, an I, an A, and an E. No F. No F. I'll let that be a freebie. There's no F. What is this word? Give me more letters. I'll let the F be a freebie. There's no F, but I won't add it to the hangman. No T. He gets one leg. Oh, he gets his leg. Oh, he's almost gone. What is this missing inventory called? Missing or damaged inventory. What do we call it? No one wants to go for the last one. I'll give him feet. So you guys get 3 more chances. I'll give him feet. So we're at 1 leg and 2 feet. What is this missing inventory / damaged inventory called? We have SHIAE. No D. Ooh, no D. We have 2 feet. Don't worry. There's 2 feet on this guy. I'm going to add 2 feet. So you guys got 2 more chances. 2 more chances, and I will tell you. Ooh, there is a G. Ooh, you guys are close. There is a G. There is a G. You guys are getting it. So it's SHI blank blank AGE. SH blank I blank blank AGE. Only 3 more letters. Shrinkage. There we go. Oh, wait, that's an N. Excuse me. Shrinkage. Shrinkage. All right, you ladies got it. Thank you for playing. Some hangman. Do we have an N before? I've never been so excited for this. Maybe we should do our vocab words. If I ever become a professor in accounting, I'll make my exams hangman style on Learn Smart. They'll be hangman on Learn Smart. You guys will have to get the words that way. Thank you, thank you. Thank you for your applause. All right, so it is shrinkage. We have shrinkage, and that's what we're going to record. Shrinkage, exclamation mark. That is the formal accounting word for lost, missing, stolen, damaged inventory is shrinkage. Okay, so if we have shrinkage, what happens to our inventory? Are we going to increase or decrease our inventory when we have shrinkage? Accountants hate shrinkage. We're going to have a decrease of inventory. Good. And if we're decreasing our inventory, are we going to debit or credit inventory? We're going to credit. So we're going to have a credit to merchandise inventory. Now, remember, this is at cost. So how many catnips did we lose? How many catnips did we lose? 2. And what was the cost of each catnip? What are we going to multiply that 2 by? 866. Good. 866. So 2 times 866 is what? Just help me out with the math. 1732. Good. Now, what can we debit? We have the credit. There's only going to be 2 journal entries. So we have the credit. What is going to be the debit? What do we debit when we have shrinkage? And there's like a whole slide on this thing. What do we debit when we have shrinkage? Now, I'll give us the debit and I'll put the number 1732. I just want the account. What account do we debit when there is shrinkage? Look through the slides, the book, Google. Let's see, what do we debit when there is shrinkage? And this will be specifically for shrinkage, so I'm going to put an asterisk right on top of that when you have shrinkage. What do we debit when there is shrinkage? Let's do it again. It's a 4-letter word or a 4-letter acronym. Could be a 4-letter word or 4-letter acronym. Give me some letters. You guys got it. You guys are awesome. I'm here having the time of my life right now talking about cost of goods sold. So we're going to debit cost of goods sold and credit merchandise inventory when there is shrinkage. Even though these items weren't sold, they are part of the selling process. Expect to lose, have missing, have damaged, or stolen merchandise. So when there is shrinkage, debit, cost of goods sold, credit, merchandise, inventory. If you are understanding this journal entry, give me an approval sign. Give me that approval. All right, Gene, are you with us? Are you there? Too, by the way. I know you're coming in and out. You might be having connection problems or something. Oh, all right, we got the yes. Okay. So for the ending's going to take forever, so I'm going to make it shorter. I'm going to make the ending short. I'm going to give you guys numbers to do the ending. So for purposes of this problem, let's say our sales is, let's say 10 million. I'm making stuff up. Let's say unearned revenue is 3 million. Wages expense is 1 million. Let's say discounts was 2 million. And let's say sales discount, sales returns and allowances. Let's say that one was, let's say $5 million of returns were made. And yeah, so what I want you guys for this one, I want you guys to calculate gross profit. I want you guys to calculate, in addition, the gross profit margin ratio. And I'll abbreviate to margin ratio. GP margin ratio. And I also, in addition, want net income. All right? So real quick, I'm going to have you guys answer this because there's no debits, no credits. I just want numbers. What is the company's gross profit? What is the company's gross profit? Again, itch on my elbow. How do we figure out gross profit? Oh, wait, I'm forgetting one more number. Sorry. Ooh, sorry. And cost of goods sold. Let's say that was 1 million. I forgot that. All right, so how do we figure out gross profit? Sorry for forgetting that one account. I just made that off the top of my head. Close. You can sales minus cost of goods sold can give you, but you're missing one little word. So let's see. Are we going to just take that sales for 10 million minus cost of goods sold of $1 million? Net sales. Good. Net sales minus cost of goods sold. All right? So I'm going to type in the chat box. Net sales minus cost of goods sold. So what is net sales? What is net sales? What is net sales? What is net sales? How do we find out net sales, guys? How do we figure out net sales? And if you are stuck in figuring out net sales, give me that confusion symbol. Tell me you're confused if you do. So Savannah's out. She tapped out. Sarah, did you tap out, Gene? Sarah tapped out. How about you, Gene? You tapped out too. All right, let me flip to a new page real quick. Sales minus blank minus blank is equal to net sales. So what are two things that can bring down your sales? Your dollar amount of sales. What are two things that bring them down? That bring down your sales? Expenses. Close. So you sell something. What are some things that can lower the value or bring your sales down? So if you sell something, what can bring it down or reverse that? What's the opposite of making a sale? What's something that can reverse your sales, bring it down? And I'll flip that. Returns. Good. Returns is 1, and that is the reverse of sales, so that brings down your sales. And what can lower the value of your sale? What can we give to customers that lower the value of a sale? What do we offer them? It's right under discounts. Good. All right. Oh, I didn't spell. Oh, wait, no, I spelled discounts wrong. I just typed really weird. So sales minus returns minus discounts equals net sales. There we go. That's my dance. So sales minus returns minus discounts equals net sales. So going back to our numbers here, what is net sales? Good. 3 million. We took sales, which is 10 million, minus sales, returns, and allowances, which is 5 million, minus sales discounts, which is 2 million. So we have total net sales of 3 million. Now, what is gross profit? So now that we figured out net sales, what is gross profit? You guys can do this. You guys got this. You guys are awesome. 2 million minus cost of goods sold. So net sales of 3 million minus cost of goods sold of 1 million gives us our gross profit of $2 million. Okay? So, real quick, guys, what is the gross profit margin ratio? How are we going to figure that out? What is the formula to figure out our gross profit margin ratio? What is the gross profit margin ratio? What is that formula? Net sales, you have it flipped, gross profit divided by net sales, GP over, gross profit over net sales. I'll give you, if that's what you think. So the numerator is gross profit, denominator is net sales. So the numerator is gross profit and your denominator is net sales. What is our ratio in percentage? What is the ratio? I gave you guys the formula in Savannah Health. What is the actual ratio in percentage? Guys got this. 66%. You guys are amazing. Yes, I'm going to leave my spaghetti arms up here. So you guys are amazing. 66%. It's our gross profit ratio. So remember, our gross profit is 2 million. Our gross profit ratio is 66%. What is our net income? That's the last question. So Sarah, good. So our numerator is gross profit. Remember, our gross profit was $2 million. And remember, our net sales was $3 million. So 2 million divided by 3 million is 66%. Yeah, don't use COGS. Use gross profit divided by net sales. So what is our net income? Going back to it, this will be like one of our last few questions. What is our net income? What is our company's net income? And I think you guys must have seen something like this on the quizzes or the Learn Smarts or something, this type of problem where you're trying to figure out gross profit margin ratio, and net income and stuff like that. What is our company's net income? How do we find net income? How do we find net income on the multi-step income statement? That's actually a hint. Multi-step income statement will help us find out our net income. Your sales revenue minus your expenses. All right, close. So do you guys remember the multi-step income statement? Have you guys heard of that? The multi-step income statement. All right. So the multi-step income statement is this, and I want you guys just to fill in the numbers and just give me net income after I explain it. So net income is equal to net sales minus cost of goods sold minus operating expenses, and I'm typing into the box. So what is our company's net income now? Just explain the whole thing in just that little line. What is our company's net income? If you are still stuck, give me that confusion symbol again. If you tap out. Not 9 million. 1 million. Sarah has it. Sarah has it. Remember, net sales was equal to 3 million. Cost of goods sold was equal to 1 million. Gross profit was then equal to 2 million. We had operating expenses of 1 million. Yeah, operating. So our net income is equal to 1 million. Alrighty. All right. So if you're good with that, what we've done so far, let me get the thumbs up. All right, Savannah gave me thumbs up. How about Eugene? How about Sarah gave me the thumbs up? All right. Let's move on. Let's do the last thing. Now we're knocking out this worksheet. Let's talk about quick assets. Quick assets. So what are quick assets? What are quick assets? Assets that can be easily turned into cash. So do you have any examples of assets that can easily be turned into cash? What is the quickest asset ever? Checks. Accounts receivable. Checks. What are checks considered? This is actually part of 6. I know you guys learned about 6. What are checks considered? If someone writes you a check, since I know that was like today's lecture or something, or yesterday's or something like that from chapter 6. What are checks considered? What are checks equal to? It's a cash equivalent, so it's just like cash. Cash equivalents. And the last one is short-term investments. We're actually out of time. That's why I rushed through that one. I hope you guys like my Roadrunner. We are out of time for today, so quick assets, accounts receivable, cash equivalents, and short-term investments. Sorry for acting all fast. Any questions? Are you guys golden? Thumbs up one more time for tonight if you guys are golden. Savannah's thumbs up in. Sarah, thumbs up in. Jen, are you there? Are you there, Jean? Oh, thumbs up in too. All right. So we are all good for tonight. I hope you guys have a good one. Have a good evening, everyone. I'll see you next time.